Good evening, everyone. This is Roy Weisert from Weisert Investment Services and TSP Tips. And we're getting ready to do our quarterly review. And this is a pretty interesting slide. I always put this up in the beginning because it kind of, as we as uncertainties seem to be the word of the day, of the week, of the month, last 2 months, we basically had just the price of the stocks or the ETFs or the mutual funds in order to go by, in order to gauge which way the market was going and which direction. So without further ado, I will click on here. Again, I'm Roy Weisert from Weisert Investment Services. We provide the TSP, the advice, the reallocations, and the weekly updates to TSP tips, pro funds tips, and mutual fund tips, and another tips, which I'll talk about tonight. But there I am. I'm currently in the office here with my daughter, Megan Cahoon. She's also an investment advisor. And without any further ado, we'll hit the presentation. So just an overview, real quick, one slide on how we go ahead and determine how we make recommendations and new investment mixes. It's basically two components. The first is when, and in order to determine when we want to be in the market, time-wise, we'll use moving averages and also candlestick reversals, which you'll see some charts on tonight of actual different stocks and ETFs and mutual funds. Okay, on the other portion is, okay, when is a good time to be into market? But then when the market is going up, there are different sectors that are performing better than other ones, or the C fund is performing differently from all the other funds, which we're going to get into the next slide. But we use performance rankings, and in the case of TSP tips, composite scores, which is a 10 signals, 10 indicators we follow with different weighting. And of course, as those 10 indicators give us a buy signal, they'll give us more points to the score. Conversely, when the market is going down, scores will decrease. So here's an example of what it was during the first quarter. These are each of the five individual funds that we have there. Let me shrink my screen over here a little bit.
Yeah. Yes.
Yeah, let me know if they come up with considering saying.
Okay, we're good. All right, so here's
we cannot see the screen. Is there any problem?
Please remember to mute yourself. But here it is from December 31st through the 31st of March, the first quarter of those 3 months. It was kind of, and this is the first time I've used this, but it shows how each of the prices, what the rate of return would have been, assuming that everybody's had $10,000 in each of those five different funds that the TSP has. And you can see there, started out okay at the beginning of the year, at the far left. Then we kind of get over into this area, have about 2 to 3 weeks. It sold off after initial jump. And then all the different equity funds, which are the S fund over here in the yellow, the blue fund, which is the I fund, the international fund, and then the C fund, the gray fund. And you can see how they all moved up in tandem until about the third week of February. At that point, right around the 19th, 20th, it started to drop off within the United States structure. And you could see how in tandem, as we went into as we closed out February, both the C and the S fund eventually turned into a negative territory at the beginning of March, and then they continued downward with the S fund being the worst performer, down from $10,000 to $9,000 at this point, so a loss of 10%. Conversely, at that second week of March, the C fund dropped down about to 6%. Meanwhile, during that period, when the U.S. funds were dropping off, the I fund seemed to be performing pretty well. And then you can see here, a bond fund the F fund increased in price as interest rates dropped down. So altogether, as we finished out the year, the quarter, the I fund was up at the top, followed by the bond fund, money market, of course, C fund, straight, C fund, and then the I fund. So how does that relate to composite scores and how we did? I'm just going to address the composite scores over here and kind of correlate that with the aggressive model. Of course, over here to the right, if you happen to be in the moderate and conservative, these are the different allocations we had over the first 3 months of the year. So, as I said, let's look at the SC fund. You can see over here, it started to get increasingly good. Remember, it had that dip right at the beginning of the year in January, but then it kept on increasing its composite score until that third week of February. In fact, it got up to a composite score of 100, while the S fund was back at 90, and the I fund was moving along, all in step with each other at 95. However, as we closed out February, the C fund and the S fund both start to track downward, like I showed you on the chart. However, the I fund continued to march, was up at the top range of the scale. And at that point, because of that C and S moving over, we were right at that point 100% invested, going from 60 to 100% in the C fund. We made the decision to move 100% over to the I fund. Okay. And then the I fund kind of was tracking along. In fact, it got up to 80. But then at the end of end of March, last week or two, we decided to go ahead. We saw a little bit of drop off in it. It reversed to a downward trend, and we reduced the application from the international fund from 100 to 55. And then that was our last transaction that we could do, investment mix in March. And then this past Friday, we went to 100% in cash in all three portfolios. Okay. And you could see, depending upon, again, what model you have, how that related to the allocations within your models. But I just wanted to show you, again, using that composite scores, performance rankings, it tells us where to move our money in the market. And of course, we want to keep it in those places that have the highest composite scores and or performance rankings. So that's how we basically modeled our transition throughout the first 3 months of this year. Putting numbers to that, the largest gain, like I mentioned on that graph, was the I fund. It was up 4.65. And of course, the S fund, which you saw, was down 9% basically. If you kind of look at that, the C fund down 4.25. F fund had a little bit of a gain, 3%. And of course, the slow and steady G fund usually returns about 1.1% quarterly. Okay. Now, how does that relate to the aggressive models that we have here? You can see the aggressive model for the quarter. It was down 0.8%, basically due to that last week or two of the quarter. Moderate fund was 3.01, and the conservative was 3.38, which were all three of those didn't lose as much as the C fund. Mutual fund window for the mutual fund window, it lost 8% for the quarter, but I'll be talking about that a little bit more because it's a little bit misleading there. Okay. Again, and also if you have any questions, please go ahead and write them down in the chat and we'll be taking some questions at the end of the presentation. Okay. This chart is very similar to what we had on the previous one. It showed the different, on the left side, it showed what was on the previous slide, but then I incorporated all of the life cycle funds over here to the right. The one thing I did notice this year as a change this quarter, they now have in addition to the 55, 60, and 65 life cycle funds, they just added the 70. And here were the allocations for those. They all have the same allocation, these four over here, but this is their allocations that they currently are in. As we finished out March, this was the allocation again, 45%, 55% in the I fund and 45% in the G fund. But then 4 days later, we went to 100% into the G fund. So let's move on here. So I thought I would just throw this chart in here today because of all the recent market volatility that we've had and the sell-off from the previous week, basically from the 31st of September, March. And you can see here the same up until the 31 of March, somewhere right around in here. But over the last 5-6 trading days, you can see how it really had a sharp sell-off there, with the S fund now going from 10,000 to 8,000 for a loss of over 20%. Here's the composite scores again as it went through the last 4 weeks. You can see the SC fund was down. Everything systemically, it was across the board. And then also, as interest rates went higher, which they did up, over the last few days, the bond fund even lost money. Now, this does not include today, but it gives you a good idea. Let's say the S&P, I think it made 9.5. Let's just round that up to 10. And it was over here at 85. So you add another 850. So that would be around up in this area, around here. Okay. We'll do the analytics on that tonight, and I'm sure that there will be a allocation change this weekend coming out once these things settle down. Okay, just thought I'd throw that in to say, okay, what next? Okay, mutual fund window. This we started in a hot mic, please.
That's right.
This we started in August, middle of August 2024, so we're starting to get some runtime in it. But this is my mutual fund window within the thrift savings plan, and the initial value was 35K that we went into it. It went up to 42.3, and then that was around 15 December, and then we basically had a reduction. We went 100% cash on the 24th of February, and the value as we finished up here is 36,933. So altogether, we did make some money over the first quarter. Since the time began, but we did have that loss that I mentioned in the first quarter as the portfolio value decreased over there. But altogether, I checked it out on the S&P 500. It was 55.43 back here, and then on the 4th, it was 50.74. So again, still in positive territory. Okay. Mutual fund window uses two mutual funds. If everybody could check their mics again for muting. What we have here, it uses the leveraged funds, which is the Ultra NASDAQ 100 Pro funds. You can see here that movement through 2025 or since August. We got into it over here at times, and then this is where we had the sell-off. And you can see this is as of last Friday. Okay, the chart from last Friday. This is a weekly chart up here. Then it goes through. And again, this probably would add another red bar. We're probably in the middle here somewhere due to the market action for today. All right, the other mutual fund that we deal with there are two of them. This is the second one. It's the Bitcoin one. It's called the Bitcoin Pro Fund, and it's an ETF that follows the price action of Bitcoin, of course. A weekly chart again. We're using candlesticks over here, but you can see how that has flattened out. It was looked like it was going to be giving us a buy signal, or getting closer to a buy signal, but then over this week, it's been continued to move downward. So where does that take us? What does it look? I don't know how many people on here have the mutual fund window, but this kind of illustrates what we send out. This was from last week, NASDAQ fund, and we were 100% cash. We've been there again. I have to remind everybody since February. It was down 19.33%. These are volatile funds. And the Bitcoin was down 0.82. And this is what it looks like, what the current status is, what the last trade was, the current price, and then when we would go ahead and get back in there. And it's not just we send this to you on a week, and then you have to decide when to get in based upon this. We always send out an alert to let you know that there's a buy that day through the mutual fund window. So I actually found it to be pretty comforting over the since February, because we always have that problem with the TSP where you only have 2 investment mix changes each month unless it's going down and you want to raise cash. But this was nice because, like, I have about 25% of my assets in the mutual fund window, but it allows you some flexibility without that two trades per month criteria or limitation. Okay, so moving on. This is something new, and this is the last, my last set of tips, but we've done this. We've had the mutual fund window, TSP tips, but there's always people that ask us I want something within stocks and I want to be more aggressive. And now, how do I do that? So this is a methodology that I've been using for many years, and we decided to take a look at this, and we're in the still not in the testing phase, but basically getting ready to make it available to anyone. But what it does here is that we follow 20 stocks over here and/or ETFs. But the thing you'll find out is that, like for Palantir and MicroStrategy and Hood and Beto, a lot of these funds over here have a 2-to-1, a lot of these stocks and/or ETFs have a 2-to-1 ratio. So as the markets go up, if the underlying stock went up 1% or 5%, these would move 10%. And that's how that works. But you can see here, this is from the beginning of this year and through last Friday, the 4th of April, the S&P was down 13.73 and we were pretty much flat. And one of that is because again, it was very similar to what I showed you with mutual fund window when we got into 100% cash. We started out at this level, boom, made a nice ride, basically have kept it for almost 2 months now, 2+ months, almost 2 months, in cash. We did try a little to get our feet wet over here, but that didn't work out. We got out immediately when we saw the market not continuing to take off and got back into cash. But this is something, if you want to get a beta version of it right now, a beta version, again, it's just a beta version because of the fact that we haven't figured out the total implementation. But the strategy is sound. And if you would like to receive daily notifications on this, my email address is there. Send it to me. You'll notice that everything is in watch phase up here. We're still watching it, waiting to see if it hits the buy criteria. And when it does hit the buy criteria, within Schwab, we would say, okay, these 3 columns become activated. You'll see a buy It'll tell you whether a market or stop market and at what price. Again, if you could please check your mic, it would be appreciated. Okay, this will probably change a lot between over the next few days here, given markets action recently. To give you one example, Palantir is a nice performing stock over the last year or two, but we were using the 2 times version up here. So let's see the last couple of trades that we did in that. So this is, again, Palantir. We over here use a daily basis. And you can see from my Schwab account, what we did here, 3 transactions, okay? If you could please check your mic, please. At the beginning of January, we got in, gave us a sell the next day, and we had a loss over here. Then we got in on 129, which is right about this frame. We ended up over the next couple of weeks, from the 18th of February, it went from 136 to 76 in main net, doubled it. And then over here, same thing. We tried to get back in this area, and it didn't work out, so we got back out. So again, what we try to do is find those areas and those trends, great performance, but then kind of minimize losses.
Come on.
Don't go our way.
Hey, stop talking.
Can you mute your mic? I know the moderator, guys, but I'm working on a different computer, so that's about it. Thank you. All right, hold us over so we can figure out how to mute.
I got
them. Yeah,
I got it.
cool. Thanks.
Okay, so just to recap there, you could see we try to, I kind of like this, liken it to fishing at times, because at times you get some bites and it might take your bait, but then when you catch the nice big billfish or big tuna, you can really get a nice return. Again, I'd rather let the returns run and cut my losses short instead of having 100% gain or anything, 100% loss or anything like that, which would be detrimental. So here at the bottom, transaction averages, 3 of them, one for 103%, and then the average of those 2 losses up there are 12.73. Okay, again, let me go to the previous slide. If you would like to receive this on a daily basis, just send an email to me, and tomorrow morning you'll probably get an email that tells you if anything moves out of the watch phase. Okay, again, I haven't had the opportunity yet to do any analysis on today's market's return. Okay, and then that's pretty much that I have for tonight. I want to keep it short and simple, but this kind of talks about some of the items that that I always put up there, some things that I've thought about over the years that I kind of use as rule of thumbs. So what I'd like to do now is open it up to any questions, or I'll ask Megan first if there's any in chat.
Please remind us of mutual fund window trading frequencies, and do they count towards our 2 TSP trades each month?
Okay, did everybody hear that? I take it yes. Okay, the question was, tell me about mutual fund window trades. Mutual fund window does not count towards your.
Huh?
It does not count towards your.
Mm-hmm.
Okay. The mutual fund window is separate from the TSP. When you move the money out of your TSP to the mutual fund window, that counts as one of your 2 transactions. Okay, so you have to be aware of that and plan accordingly. However, once that money is into the mutual fund window, you have unrestricted trades. You can do it day after day if you want. However, you also have to take into consideration, and this is what we try to do, we would never use that same Schwab tips methodology within the mutual fund window. However, with the transaction that you make within mutual fund window, they will charge you, I think it's $28.95. I usually just round it up to $30. Okay, $30 to move it in, $30 to move it out. And it's not like a reallocation that you do with the TSP, where we put in 55% in Fund G, 45 in aggressive. No, you have to go take money, 50% out of your, let's say, currently we're 100% in cash. You can go 50% into Pro Funds, Ultra NASDAQ 100 fund, and then another 50% into the Pro Funds Bitcoin one. And that would count as total cost of $60 to go in and $60 to go out. And that's why we've modified that a lot from the free, is to make sure we don't build up too many transactions and try to keep the transaction costs to a minimum. With Schwab tips, they don't charge you with anything in order to move one from one stock to another or to the money market. It's totally free. And there's no fees with Schwab also, which is good. And no limitation, such as $5,000. Conversely, TSP tips, TSP, when you go to mutual fund window, besides that transaction fee, they're going to charge you about $50 a year for annual. Okay. So are there any other questions that we have?
Hoy están jaspando la cabeza, ¿verdad?
Okay.
The next one is, if in the L fund, should we get out while all this is going on? It does not seem the L fund is looking at the market, but just seems the same amount to matter what happens.
Yes, the question is, how does the L fund operate, basically?
Yeah,
Or
should we get out?
The L fund, they could still see my screen, right?
Yeah, go back to that.
Okay. The L fund, if you really look at this down here closely in the bottom right corner, that's the L fund 2055 allocation. And you'll notice here it starts in 2020 and it goes through to 55 down here. So this is where we are, let's say, during any time point. And you can see the different funds that they have in there, what component is. And you can see how the G fund, the brown, again, as you start out in the beginning, it is not even available, let's say, within the funds with a long expiration. However, as you move to the right and you get closer and closer to your target date of, let's say, 2055, that G fund, the brown, continues. So they use this same thing, this whole period, let's say, of about 25, 30 years or so, 30 years. All they do is they keep that allocation for all of these funds and just change this line into how close you are to retirement. Okay. So what the life cycle funds do, they try to go ahead and say, we're going to go ahead and use diversification and just take it like that. Age diversification. Simple way is to say, okay, however old I am, that's how much is going into the G fund. And then I'll use the remainder in there, split evenly, let's say. But the L funds are useful if you want it to set and forget. They're very useful there. I've been through too many times where, over this week, back in COVID, throughout the years, on some of the strategy, I call it the buy and hold calamity, where the S&P 500 didn't move anywhere for about 13 years because it gained money and then it lost 50%. It gained 100%, it lost 50%. So I basically went nowhere for 13 years. But it's a strategy. Now that's up to you as to which one you want to follow, and it doesn't have to be all in one or all in the other. You can do a mixture, like if you want to use for your let's say 50%. If you're 50 years old, you want 50% within the L fund and 50% within tips. While conversely, if you may be 40 years old or 30, I'll say 30 years old, you can use 30% in the L funds and 70% in the tips. So, but it's just a strategy. And you can, all these numbers are available on the TSP when you go to the website under fund performance, and you can get a lot of these figures that I'm getting here. You can actually scroll to the left and right and see how these target funds, life cycle funds, change their allocations. Okay.
Do you see any value in these daily adjustments of one of the life cycle funds during times of high volatility when the market is swaying back and forth from bonds and equities at high frequency?
No, because they basically are set and forget. They'll rebalance it quarterly, I think it is. And they go in and take a snapshot. And if you have too much, if at this area down here, if too much is in the F fund, if it's supposed to be over here to the left, let's say, or the purple fund, the I fund, it says, okay, it's supposed to be at 27% down here. If it continues and the I fund went up, the next quarter, they're going to ratchet it back down again to the top of this purple line. So they'll sell some of that. While conversely, if the C fund had decreased the length over here, the width of the greenish bar, they're going to go ahead and put more money in over in there. But it does not look at it from a market perspective. It looks at it solely from an age-based calendar basis or seasonal basis.
If you have an account with Schwab, can you use it for the mutual funds you mentioned, and is it taxed differently?
Yes. That's the benefit. I had a slide in one of the other ones, presentations, but specifically, you can go ahead and use Schwab in order for mutual fund window tips. And there's no annual fee, no setup fee, and no transaction fee. And it's no minimum. Like if you wanted to invest $500, I am a big proponent of Schwab. I like how the company works. I like the ease. I like the fact that we always, once I go into, let's say Schwab, it's just such a nice. Now, the thing I will say is that with all these transactions that you have at times, it gets to tax reporting. So all my money that I have in Schwab, and all my investable assets are in tax deferred accounts. So I don't have to worry about doing annual cost basis returns. It all gets taxed or tax deferred, whether it's in my traditional IRA, my traditional TSP, and or my Ross. So I don't worry about annual cost basis in any of those if it's within a retirement type of account. Of course, then you have to, worry about required minimum distributions and things before, things afterward. But no, if you're going to have frequent trading or anything like that, I'd highly recommend doing it with within a tax deferred or tax free account. So that's how I would cover that. Okay.
Is Justin gonna send out the recording, or are they gonna have access to this afterwards?
Yes, Justin will send out the recording. We'll let you know when he posts the recording. But I've already sent him this slide deck. So anybody that's listened into it I'm not sure if Justin, he said he
He'll
might be a
post
little
on
bit late.
YouTube.
And
Justin said he'll post on YouTube.
yeah, Justin will post it on YouTube. And I've already forwarded him this slide deck in PDF. So everyone that's logged in tonight will receive it.
And you can see the previous meeting. So,
Yeah, and you can see the previous meetings
if it makes
also.
sense.
Okay. Is there any more questions in chat?
Nope.
Okay, does anybody else have a question they'd like to ask? Okay, then we'll
He
call.
said I do 1 second.
Okay. So what was that?
I was asking you if you wanted to give out your phone number for further questions, if you
Oh, yeah.
wanted to.
Yeah, I
It's
will.
always available.
Yeah.
Okay, reading the tea leave with regards to the TSP, you will likely not make a trade until Monday.
Yes, probably. I mean, yes. It'll come out on Monday. And the reason is that while some certainty has been taken out of the market, it will not. I'd rather have a little bit more confidence instead of 1 day. And when we get into it, it's going to be a significant allocation change if things pan out into both the C, S, and or I fund, depending upon the model. Since we've already used up one of our 2 transactions for the month. So you may see a big swing there. But at times it's also to have patience. We've seen this before where, yeah, it was a great gain today, but could something fall off the back of the truck tomorrow and or Friday? So again, I doubt there probably will see an increase in some of the composite scores, but it won't increase to go from 0 or 5 to 85 within 3 days.
Yeah, so the next question, which ties on it, if you're waiting till Monday, are you thinking today was just a bounce and you're wanting to see a trend?
Yes, a mini trend, but I don't want to be. I'm not worried about emotions as it is. What we saw here, if you go back, in fact, if you look at the charts, it's a great question that you
If it's a
have.
trend, how long do you watch?
Well, we always watch it,
Mhm.
but this reminds me so much of COVID. And if you go back to February and March of 2020, it was the fastest drop, okay? And the fastest rebound. It went from the March lows on March 23rd, I think it was, until August 15th. That's how much it took to to generate enough to get back to where we were at that point. So the question is, it's almost a depends thing. I don't want to wait for that long, but if I see a trend, and I think that some of the uncertainty did come out of the market with the fact that we didn't know if, first of all, we're going to have tariffs. Yeah, we're going to have tariffs, how much it is. Then maybe he'll pause, maybe it won't occur. Maybe it won't be everybody. Well, all that uncertainty is gone now. Tariffs went out to pretty much every country. The only one I think that we have remaining or having competition with is China, but it looks like we'll still keep the tariffs on with China, but the certainty with regard to other countries and negotiations, that's off the table. I mean, that's still planned, but now we have a 90-day pause. And that's why the 90-day pause that I saw, that the president came out with that about 1:30 this afternoon, caused that big reaction. But no, it will be, that uncertainty is behind us. I feel confident about that. So the numbers will increase, but I want to make sure that I'm ahead of the curve when we get back in, just because if we did it in 2 steps, that's not feasible. So look back on your charts to February, March, April of 2020 during COVID, and you'll see almost the same chart as you'll see in the last, 3-4 months, including this month. Okay? Very similar.
Do you feel there's more uncertainty with so many players in play 80+ countries?
No, I don't think that I'm sure that a lot of that will be negotiated by different people on different staffs and with oversight. But no, I don't think that'll be that hard to do. That's just my personal opinion. China will be the only one because you have the competition there.
All right, and what is the YouTube channel? Well,
What is okay,
well, I'll have Justin post it.
okay. Justin will post a YouTube channel. And I'm sure that when he sends out the slide deck to you, he'll also go ahead and give you a link to the YouTube channel. Okay. Okay, last call. Anybody else? Okay, thanks so much for taking the time out of your day. And if you have any questions, please feel free to send me an email. Remember to sign up for Schwab tips if you want it. And or if you want to discuss things on a one-on-one basis, I gave you my number, or if you just want to follow that up with an email, that's fine and dandy too. Okay. All right. Everybody have a good night and enjoy yourself. And that's it for tonight. Okay. Bye.